Let's face it, we're living through a period of great economic volatility. And a lot of what we hear in the media lately is scary stuff. Each day seems to bring more potential doom and gloom. Another report of a company failure, more jobs lost, a schizophrenic global economy, and concern about an impending recession around the world. And this continuing conveyor belt of bad news has a way of instilling fear in us, causing many of us to withdraw from the markets and become obsessed with the worst case scenario. Hi, I'm Michael Yardney, and in this market update I want to explain to you a bit about what the market turmoil means to our property markets. But before I do, I want to explain to you that if you want to become a successful property investor, if you want to get ahead of the pack, you really should buy my great book, What Every Property Investor Needs to Know About Finance, Tax and the Laws. With my three co-authors, a top finance specialist, accountant and solicitor, we cover the way you can build your own property investment business. It's a must read because it's not how much money that you make that matters. It's how hard your money works for you and how much you keep that counts. And this shows you how to do that. Okay, back to what's happening in the world. Some doomsayers are suggesting we should sell up all our properties before that almighty crash comes. Just like it has in the United States and part of Europe. While other commentators suggest our current markets present some great opportunities. So is it a good time to buy property, or is it time to sell up everything? Now, I wouldn't blame you for feeling confused. It's difficult to sort out all the information and statistics bombarding us every day. Sure, the real estate markets have slowed down and property values have fallen over the last year or two. But while the doomsday speculators would like us to believe it's the end of the world as we know it, the truth is, property always has its peaks and troughs. It's just the way the market works. Since I started investing, almost 40 years ago now, I've lived through 9 property cycles, and in every decade, there's been a period of 3 or 4 years when the property markets have been flat or falling. Yet at the end of each decade, the value of well-located properties in Australia, in the capital cities in particular, has doubled. Okay, why do I think property values in Australia are going to increase in the long term? There's no reason to think it's not going to continue because, especially in our capital cities, because in the long term the values of property markets are buoyed up by 2 things. A growing population as we import more people, they're going to provide skilled labour and replace the retiring baby boomers. And the second thing is our nation's going to become wealthier, driven by the resources boom, the mother of all resources booms. Okay, why won't we have a property crash then? I don't think we're going to have a property crash here, like happened in the overseas markets, because a number of factors are underpinning our property markets. This includes, we've got a healthy economy. It's bucked all the global trends as it's grown strongly. It's actually become the envy of all developed nations. But there's still room, because of this good economy, for our government to stimulate further growth. Hopefully they're not going to give us pink bats like they did last time. So the strong economy is going to underpin our property markets. What else? Well, if their interest rates are relatively low, because the Reserve Bank's trying to stimulate the economy, it's got room to drop them even further if required to stimulate the economy more. But if you compare this with overseas, where interest rates in Europe, in Britain, well, USA, in Britain, Japan, and much of Europe actually, is pretty close to zero, there's actually not much scope for them to help their economy with low interest rates. In Australia, we've got low unemployment rates. That means the average Australian has a secure job. I know some people are losing their jobs, but overall, the Bureau of Statistics showed that in May we created 39,800 jobs, blowing out of the water some commentators' expectations of rising unemployment. Look, of course, some job losses are occurring in sectors undergoing structural changes. And that's a concern, and it's not good if you're involved in that. But we do need to focus on the big picture and remember that unemployment is close to historic lows. Another thing underpinning our property markets is our sound banking system and the fact that relatively few people are in mortgage distress. Our balance sheets are in good shape. Our governments, our banks, many companies and most Australians have taken a conservative view since the global financial crisis. They've paid down their debts. This includes company debts, home mortgages, Credit card debt. In fact, much of the outstanding debt is now in the hands of those wealthier Australians who can afford it. We're also in the early stages of the mother of all resources booms. Now, sure, China's slowed down a little bit recently, but there's hundreds of billions of dollars worth of infrastructure spending already committed to Australia over the next few years. And if you look over the next couple of decades, that's going to continue. The growth in China, in India, and to a lesser extent other Asian countries is going to underpin our resources boom. So, while some people say the cup's half empty, I'm suggesting it's half full. It's important not to trivialise the possible consequences of the world's economic problems. But equally, it's important to remember that every cycle brings its downturns and its times of opportunity. In my experience, difficult economic times offer outstanding opportunities for those who are prepared. You see, wealth isn't necessarily lost at times of financial crisis. It's transferred from the financially uneducated to the financially fluent. We've had the global financial downturns, or have had global financial downturns like this before. And we're going to have them again, because the economic markets move in cycles. The specifics change every time, but the pattern is similar. The losers in financial crises will tend to be those who are over-leveraged, those who don't have cash flow buffers, those who speculate, and investors who overreact to market long-term. They make long-term decisions based on, some of these short-term emotional factors. On the other hand, the winners will be those cashed-up investors who've got a long-term perspective and they're able to spot those opportunities. So the big lesson to you is this too shall pass. Unfortunately, the current world economic problems are not going to go away quickly, and we're entering into a new era in our financial markets. But this is not a time to panic or make rash emotional decisions. It's a time to learn from history. If you look back over the years, every decade there's been longish periods, often 3 or 4 years, where the market's been flat. The property markets have been flat. But the general trend in the long term has always been upwards. And over the long term, capital city property growth has been around 80% compounding. And that's been going on for years and years. But of course, these are just averages. The better your property selection, where you buy, what you buy, how well you negotiate, how well you finance, how you time things, the better the returns could be. So fast forward 10 years, because if history repeats itself, as it surely will, while the majority of Australians are going to sit on the sidelines waiting for things to work themselves out, a group of successful investors are going to be looking for and buying investment opportunities created by the changes we're going through right now. Then, when we look back in 10 years' time, we're probably going to remember a decade of economic turmoil. But as always, we'll wish we had bought more properties when they cost about 50% less than they're going to be in 10 years' time. Of course, you can't just buy any property. You've got to buy the right type of property. One that's got a level of scarcity, meaning it's going to be in continuous strong demand by owner-occupiers, because they're the ones that push up property values, and by tenants, because they're going to help subsidise your mortgage. You've got to buy the right property in the right location, one that's outperforming in the long term, at the right time of the cycle, which could be now in many states, and of course, for the right price. And to be a successful investor, you're going to need to surround yourself with a good team of independent and unbiased property professionals, not salespeople. A team of people who are known, proven and trusted. So it's probably appropriate to remind you that at times like this, no one can help you quite like the independent investment strategists at Metropole. Remember, the multi-award-winning team at Metropole have got no properties to sell, so their advice is independent and unbiased. If you want to find out a bit more about what's happening in your market, what our research is showing is going on, why don't you attend a free property briefing in our offices in Melbourne, Sydney, Brisbane, or with our associates in Perth? Just click on the link below to find out more and reserve your place. I look forward to seeing you in my next update in 2 weeks' time.